Hello and welcome to Livewire Markets. My name's Tom Richardson and today I'm sitting down with Kera Van Valen, a portfolio manager at the Epoch Global Equity Shareholder Yield Fund. Kera's going to talk to us a little bit about the fund and how she thinks about making money in markets. Kera, welcome.
Thank you.
Okay, first of all, do you want to just tell us about your role at Epoch?
Sure. I'm a portfolio manager on the shareholder yield strategies. Originally joined Epoch in 2005. I left and went to business school and rejoined in 2008. I've been part of the shareholder yield strategies since the inception of the strategy. I moved from an analyst to being a co-portfolio manager and then ultimately the lead portfolio manager.
And what's your investment philosophy in running the fund?
We look for companies that generate sustainable and growing free cash flow and have made a commitment to returning any excess cash flow to shareholders in the form of dividends, share buybacks, and debt reduction. Really, there are 5 things you can do with your cash. You can either reinvest in the business, you can make acquisitions. By all means, if you can earn above your cost of capital, that is the fastest way to grow the business. However, we don't think there's an unlimited supply of opportunities to earn above your cost of capital. So then it's about being disciplined in returning any excess cash through dividends, share buybacks, and debt reduction, of which we would consider all 3 of those dividends of sorts, and that it's a way to return the cash to the share owners of the business. So what we're primarily looking for is companies that are growing their cash and returning the cash to shareholders consistently over time.
And the research team, how they support you and your investment process, can you talk about that?
Sure. In addition to myself, I'm joined by 2 other co-portfolio managers, one more from a fundamental standpoint, Michael Jin, and one more from a risk management standpoint, Lin. And then in addition to Michael Jin and I on the fundamental side, there are 4 dedicated analysts to the shareholder yield team, all looking for companies that generate the sustainable cash and consistently return the cash to shareholders.
And does the fund have a targeted return? How does it aim to achieve that?
We do. We are looking to have market-like, if not slightly better, returns over a market cycle. And the way we do that is by really diversifying the portfolio. We start with the screen. The screen helps us identify companies that are capable of generating the cash. We spend the bulk of our time doing the fundamental research, really trying to decide what is driving the cash flow and how comfortable are we with the sustainability of the distributions back to shareholders. We then build a portfolio of 90 to 100 names, I'd say on average 100 names, that is very well diversified. Not only is it diversified by sectors and countries, it's also diversified by the drivers of return. So we're looking for 4 to 4.5% to come from dividends, another 1.5 to 2% to come from share buybacks, and at least 3% to deliver this market-like return over time.
And in terms of regional weightings, you mainly in the US or Europe or?
We historically have been roughly half US, half outside the US. Today, slightly more in the US, just by nature of the way the markets have evolved over time. But roughly 60% US, the rest non-US. We absolutely want to be a global strategy, not a US strategy with a handful of non-US names. We really want to find companies that are going to deliver the shareholder yield attributes. So we're investing in companies, not necessarily countries. So we want to find as diversified a set of opportunities as we can around the world.
I think you've said how the fund has a really big focus on income for investors, and you've said how free cash flow growth drives dividend growth. But what sort of qualities in companies do you need to produce that?
In addition to having the consistent cash flow generation and the cash flow growth over time, you need sound capital allocation policies. So we want to find companies where management teams understand the emphasis on returning any excess free cash flow, when you can't earn above your cost of capital, returning any excess free cash flow to shareholders in the form of dividends, share buybacks, and debt reduction. So it's those capital allocation policies that are very well defined, that if a company's cash flows are growing, the cash distributions back to shareholders should grow over time because of the capital allocation policy that emphasizes consistent return to shareholders.
Markets, more generally at the moment, we've had this trade war, different headlines every day. We seem to have found a truce. Some people are worried that the trade war could push the US into a recession. So how do you see markets today, and how are you thinking about positioning the fund?
We would expect there to be a lot of volatility as we move forward. There's a lot of uncertainty that's been introduced. While we do have a bit of a truce right now, it is a pause. And so there's a lot of uncertainty. We still haven't seen the impact of on the overall economy of having shut down the borders. for a few weeks here. So we would see a lot of uncertainty moving forward. The strategy happens to be more defensive by nature, by being more of an income-oriented strategy. We think we're well positioned to protect on the downside, but participate on the upside. The downside protection is one of the hallmarks of the strategy. So we welcome the volatility that we would expect to see moving forward, but we think the uncertainty is certainly going to bring volatility within the markets.
And the first quarter, the performance-wise?
The strategy did well in the first quarter because that downside protection, but being able to participate on the upside, ultimately led to what was a strong quarter as people were looking for certainty. Dividends, always positive contributors to equity market returns, means they tend to be less volatile than the overall broader market, and that was rewarded within the first quarter.
Okay, thank you very much, Kera. Some great insights into the fund there. If you'd like to see more content like that, please visit livewiremarkets.com or subscribe to our YouTube channel.